Hey guys, welcome back to Bite the Buck. Today we're going to take a look at this week, February 24th to the 28th. This week had massive moves to the downside. As you can see, we're pretty darn bearish, right? If you look at it from the 4-hour going down, we're pretty bearish. There were a few opportunities to actually trade, take advantage, but me, of course, I got a little too antsy in my daily limits and lost on those opportunities where I could have actually traded. But anyway, we'll start off on the hourly from the 24th, and then we'll make our way down to the 25th, and continue going down the time frames just to see where there's structure and other potential trades. So let me just remove all these executions on this paper trading account. Okay, and then we can take a look. So I already graphed out or charted out everything except for on the 27th, which I did not end up trading, or the Wednesday. But anyway, 24th, we build the support over here, and we extend that into the 25th. We also have a resistance over here as well too that we also hold. Price continues going down because again we're in a downtrend. For the 25th, price opens and breaks down and continues, which goes down crazy. This is all based on mainly the corona news, right? A lot of people or investors are really fearful of what it'll do to the the corporate side and businesses and production, right? If people stop going to work in China, what exactly will that do to the factories production? We know Tesla's in China, right? We know there's a ton of different companies in the US in China, so there's definitely going to be an impact on the stock market, specifically the S&P, which contains US equities. But anyway, if we look at the 26th, at open we push up to continue going back down. I would describe this as a fake out only because we have a resistance here, and we only have one candle that closed above this resistance before continuing to push down. If you were just trading the open, then definitely you'd be fine, right? Because it went up $20. If you can capture $5, $6 on a daily basis, then you're fine. You'll be rich within 2 years easily. But anyway, price continued to go back down after 12 o'clock, 1 o'clock, continued after market. Now it's just waving again to continue down, and then again for the 27th we have price pull down and create a massive wick only to be filled, right? This wick was a $40 move. So again, being able to catch that move, you would be in a perfect spot. Because what is $5? $5 is only 11% of the move, right? Which is catchable before price moved up to continue going back down, which again moved $100, which is pretty crazy. And then of course the Friday, right, February 28th, we built some more supports and resistances. The support was broken in the aftermarket / pre-market, and then it held for the remainder of the day until the end of the day where price pushed back up. Again, if you look at the weekly, massive move. This move is crazy. They're saying that this move is pretty much unheard of. The last time we moved like this was in 2008 apparently. We got as low as, what is this? We did 13%, almost 14% in a week, 5 days. Not to mention last week was negative as well too, and we gapped. So this week is going to be a big week. Are we going to continue going up, or are we going to continue down? Right? This is a really nice daily candle. I haven't seen this a long time, so you never know. We could be on the way back up. Anyway, let's look at the 30-minute between the 24th to the 28th. So now the 30-minute, again, right, we have our highs and our lows, a little bit of consolidation, supports becoming resistance, etc., etc. So on the 30-minute, over here, depending on the trade you are, would have been a really, really good trade. If you were able to forecast that we continue moving down, you could have either waited for this candle or this candle to close before moving down. Another thing you could have done was taken the position after it touched here, right, which would have been a perfect entry, and then taking it back down to this spot. Because again, right, if we're going down, then you should probably be looking for trades to the downside, right? I get that we came up here, but again, it depends on the type of trader, right? At open, if you're anticipating the buys, then by all means, right? Because this is a $24 move. Capturing $5 would not be too hard in a $25 move, right? I'm pretty sure on the smaller time frame, it'll tell us something much different. And even again, if you try to get into the buys, right? Like you're buying over here as a support, right? Even after this or even this close, you're still, $12 stop loss that you'll probably get stopped out. Because for myself, my stop loss is between $2 to $3, right? And then I need to take a $5 take profit. Anyway, let's move to February 25th. So on the 25th, at the open, we had a massive move to the downside on the second candle, right? The first candle, it showed a bit of rejection, and it acted like the support was actually viable, but in fact it really wasn't, right? Price pushed, and we had our first bendy over here on the 30-minute. I'm pretty sure that on the lower time frame, we have a bendy earlier up here somewhere. We have to. But anyway, price pushed down this whole entire day on the 25th. And if you're a nice trader, you probably would have been able to capture at least a $100 move, which again is pretty insane. Pretty insane. Let me see that again. Yeah, that is pretty insane. And then the 26th. So for the 26th, what happened was, as the day ended between the 25th and 26th, a support was built, and then price came back up to fake out, breaking this resistance, right? Depending on the type of trader you are, there was definitely potential to catch this back to the upside. But again, you have to be really mindful of these wicks, right? This is a 30-minute. That's an $8 wick, $9 wick. So you got to be able to actually see that and recognize that it may wick on you, and a $2, $3 stop loss will not help that. Even over here too, right? For someone like me, when I see the structure breaks and then there's a pullback like this, I would probably want to buy it. I'd probably want to buy it, right? Only because this is a $22 move easily, right? After you lose that trade though, I think it's pretty clear that it's going to the downside, especially after doing this little consolidation and then push down, right? Even if you're able to catch that, again, another solid $70, $60 for you. Now for the 27th, it's a bit more choppier, but again, right, overall we're going down. Price open, push down before continuing up, push down again. On the lower time frame, we'll probably see something that looks really good. I love making these plays, right? Especially if there's a bullish engulfing, where price pulls up and then pulls down. Again, though, you have to be really careful on these wicks. This is a $16 wick, $15 wick, so you gotta be really mindful. One thing to note too is this bendy over here. It's not the most valid bendy, but since we know that we're going down, we should be looking for those on, you know, the 30 minute, the 5 minute, and even the 15, and sometimes 1 minute, depending on how quickly price is moving. Now for the 28th, price, it made a massive whip to the upside right before creating new lows. Once price made this low and touched 28.54, it never seen it again. Right after that, price was playing around with this resistance before actually breaking through it at the end of the day. There was more Corona news after close, so I'm expecting a gap back down into this area and possibly a move back up. Right, we could see, you know, multiple things happen. Price could even gap up and then continue down, right, to make new lows. So it's really a matter of what it wants to do here. This structure does look like it's gonna go back up, but again, right, we have to just see how it plays out on the Sunday. So now moving on to the 15 minute, we'll go back to the 24th and look at some more opportunities. Oh, okay, so perfect. Like I was saying, right? So this may not be the best bendy, but you see how once you break the structure, there's a bendy right over here, right? And this is the one that you'd want to play. This is the one that you would want to play, right? Once you get the close on that, boom, you easily get your 100 pips or 90 pips, right? If you weren't brave enough to take it up here. Because for me over here, I wouldn't mind the buys, and I wouldn't mind the buys over here as well too. I think it's good buys, right? Although we're on our way down, I think it's definitely good buys back up to the top of at least this area, right? Because look, that's $16, $22. But again, it depends on the temperature anywhere. But anyway, let me go back to the 24th. So on the 24th, right, if we are anticipating the move down, then we should be taking our trades at least up here, right? If you're not comfortable taking it up here, then of course the sell would be valid, right? But again, you have to wait. So if you're waiting on a bendy, right, here's our bearish engulfing, right? We're engulfed the last two candles, price pulled up, and then you can take it back to this low, which again is $18. $18 is really good. For me though, I'm only looking for a $5 move. What else is this? I want to see how big this candle is. Oh wow, this is even more than usual. Right after that bearish engulfing. Anyway, let's move on to right over here. This is a perfect area. I actually like this spot. Even though it was a fake out, there was opportunity to make money. There's always opportunity. Okay? So now, for me, right, if you didn't get that initial buy, what you can do is wait on the pullback. I know that this wick most likely is bigger than $3. Of course it is. Of course it is. And getting stopped out there is no big deal, right? You can always get into the position again, or you can just wait for it to actually do that bendy thing again. So for me though, I probably would have bought here, got stopped out, and then bought again over here, and take price back up to here, right? That would definitely make up for any losses that you've incurred. Even if you took 2 losses in a row, that third one would have been completely fine if you took it back to the top here. Another opportunity I probably would have taken was this one, only because we closed above, right? We got the close above here, we got the close above here, so I would definitely love to take this. And you know what? It would have been an easy $5 move, but price never came back up here in the first place. Rather, it seemed to go down, right? And this is where the fake out happened. Because even when it came back over here, I think over here would have been a really good buy as well too, right? If we're actually on our way up. However, price did not do that, and instead it continues going back down. We had our first bendy to the downside over here, so depending on when you took the trade, you might have been stopped out. But again, there's always opportunities, right, to take advantage of that. Now on the 27. So 27, let's see what I circled here. This does not look right, but I'm pretty sure 30 minutes shows a bendy. 27, yup, there's a bendy. So now on the 27, well, this looks so crazy on the 15. Anyway, on the 27, you see price doing this thing over here, right, before it goes down. This looks pretty obvious that it was going down, but you got to be careful of these wicks. On the lower time frame, we'll definitely be able to see something that looks much better. For me though, I probably wouldn't have taken this because of the wicks, right? Unless I can get a position that's up here at the wick, then probably not. But anyway, another position I probably would have taken was over here when price was consolidating. I like when price moves in one direction and consolidates, because usually it means that it'll continue. On average, it continues. So there was definitely room to capture $5 here, right? Once we got the close here, boom, $5 at least. And that is if you were quick enough with it. We'll check out the smaller time frame and see if the consolidation is actually valid as well. So let me just square this, and then we'll take a look at that. And then over here, I think you have two options, right? You can either take the first one, right? If you don't believe in this wick, it's gonna get filled, or you can take the second one. The second one would have been, just as good as the first one, since the difference isn't too much, 14, right? For a $60 move, $70, right? Depending on how long you hold it, because this is, golden opportunity for traders who are consistent and who let profits run. So now the 28th. 28th, here's a big move to the upside, right? Boom, $30 before plunging down $60, which is absolutely insane. Your best bet, I think, would have been after this move, right? You've seen that we had a big bullish candle, right? And then it pulled down before going up back to the resistance, or even up to fill up this wick, right, which would have been fine too. The next best trade would have been over here after it pulled down, right? We see the structure that formed, and then also over here too, right after the close, we could have captured another $5. So it really depends on what you're looking for. For me, I wouldn't feel too comfortable getting into positions in this area just because how much is a whip song, but hey, to each his own, right? Let's move to the 5 minute, and then again we'll go from the 24th to the 28th. So on the 5 minute, this is where a lot of golden opportunities are. So let's see, 5 minute on the open, 9:30. Price pushed all the way back up here to the resistance before pushing down. 5 minute is sometimes difficult to look at, right? These wicks are not the biggest, but these candles, right, and the patterns and the pullbacks are much they're more there, right, and more present. For me though, as far as positions go, I'm not too sure what I would take over here. I'd love to see it break out first before I take anything. If I was anticipating the downside though, I would have loved to take a position over here right after this close, which I would have been stopped out, and then possibly a sell over here once we got that bearish candle that consumed these two candles here. Another one would have probably been over here after that bendy. Let me just get a brush after this bendy, which would have been nice, and then also after this one as well too. Not this one, but this one, right? Because where we see the wick, right, we come back up to here, and this is where the structure is being formed. Let's move to the next day. On the next day, we have February 25th. So 25th. The 25th looks difficult on the 5-minute. Wow. Probably not the best, but one opportunity probably would have been over here, right? With this, you probably could have taken it at least down to here, right? $16, and then if you're brave, let one run all the way until the day ended. As far as entries go, I don't really like how this area this area looked, or this area. And then over here, it would be a really a waiting game, right, to see what exactly would happen. Because look, this came up $3, $4.50, $5 almost, before actually plunging down to $20. So, like, you gotta be comfortable with, you know, moving your stops a bit, I think. For me, though, I want to lock it in at the 250. If I lose it, I lose it, right? I'd rather enter another trade than actually extend that stop loss. Another opportunity, too, could have been over here as well, right? We have our first bendy, price pulls down again, and then boom, another bendy, right? After this bendy, though, there wasn't any wick, so price moved down $10, and there's your profit back. And if we're still anticipating the move down, then again, right, once price came back up here and we closed like that, boom, another $10 move. Once price actually broke this support too, again, you have more opportunities to take positions. So price came down, price pulled back for a bendy over here. And then as far as the wick goes, ooh, that's close, that's real close. But then, you know, price kept going down. So again, you gotta be really just careful of that stop placement, right? Because this would have been real close. I probably would have tilted after if I seen that happen. Even over here too. Wow, real close. Let's check what over here is. This is another good opportunity. But again, the timing is really important too. If you're taking a trade at 140, then you know you gotta be careful because it might not be too predictable. After that, we have another opportunity over here, right? Price bends again, and this could be taken to the bottom for again another $10 move. So you gotta be really just careful, right, when you're trading. Now when we look at the 26th. For me, I would love to be able to get into this trade initially over here, but you know that probably wouldn't be me because I'm not be guessing the direction. The greatest trade opportunity that I see here would have probably happened when price came back down here to pull down, right? If we waited for these closes, damn, would have been stopped out. So we really have to play the price level versus, you know, the close, right? Once price came back up, could have gotten right there. Another great opportunity would have been the bendy over here, right when that closed. Price only pulled down $1.75, and again you could have made your $7 move, or even $10 depending on how high you took it, right? If you took it to clear the wick. Price came down, right, and came back up here. So once you realize the price is coming down, it would have been, here's another area that you could have taken, right? Because now you see that, you know, we have this little zone to play with. Taking that trade would have been real easy in my eyes. After that, we have the 27th. So for the 27th, you see this is why this one was hard on the higher time frame, because we had more wicks that we were playing with. Um, damn, it just looks real choppy. As far as opportunities go, I don't think I'd be comfortable taking any. Right on the 15-minute, we've seen consolidation over here, but now on the 5-minute we don't. Right, I see consolidation right here though. For me, you know, if I didn't get in on this trade, on this right after this bullish, then I may not have, you know, won a trade, right? Because if I take it after this one, then boom, stop loss hit. So that's why it's really important to take it after the first bearish pullback, right? Because you know it could consolidate and you can really, you know, get stuck in a trade and then eventually stopped out. What else is there? As far as the downside goes, I don't see much else other than over here. Right here's another perfect bendy opportunity. Right, we broke some structure lows. Even over here too, bendy, broke some structure lows, and then again we push down, which is an insane push, insane. Now for the 28th, on the 28th, again, like I was saying, it's real bumpy, right? We seen this waving, right? So there was potential to actually take buys, but again, right, it's a matter of perfect timing, right? If you took it after the close, you're screwed. Boom, that's a $10 wick right there. Take it after this one, screwed. $3 wick. After this one, screwed. $3 wick. Right, so what do you do? Right, there's a lower time frame for that, the 1 minute. I'm only going to show the 1 minute here because when price is moving quick, there are actually bendies that occur on the 1 minute, which are golden opportunities. Let me just highlight a few, right, that we got. We got over here, and then over here, which are, you know, I consider them good ones. And we also have an opportunity over here too with the consolidation. But again, you have to be really careful because taking it here, boom, $5, so you're good. Let's move to the 1 minute real quick, and we can see what I was talking about. Okay, so now it looks real bad. So this resembles exactly what I seen over there on like the 25th and 26th, right? Where we have our little bendy here, but then price pulled up again before actually continuing down. Looking for 1 minute bendy. So here's a nice 1 minute bendy. It's kind of iffy though because it's not above this resistance. Same over here too, right? You would have been stopped out because that's $3. But again, right, this is just like a little consolidation before moving up. That's all it is. Right, same over here too. We have our structure that's built, right? Price came up, it closed above it, came back down, up, down, before pushing up again, right? And that was just definitely an opportunity for a move. I'm looking for more little bendies. This area doesn't look too good on the 1 minute. Over here though, it looks great, but you may have been stopped out depending on what time the trade was taken. Right, if you waited for a bit for this wick to fill before taking it back up, then you would have been fine. Here's another great opportunity right before 1 o'clock. Boom, $19. So it's really a matter of, you know, being real careful, right? Here's another opportunity here too. Really nice bendy, right? The candle is pretty big. You could even take it to the bottom of this wick, but price just continued. Again, price breaking support and becoming resistance, which again is really good. And then over here, same idea, right? We have that there, right there, as far as bendies go, there's a potential one right here, right, for $6, which would have been, again, great. For me, I probably would have taken this one, where it failed, and another great one is actually over here, which is, you know, flawless, because price continues to go up. And then again, over here, because price again continued to go up, and that would have been the second one after the break. And that is amazing. Wow. And then even these guys too. But these ones are pretty early because, you know, we haven't really broken structure anywhere yet, except to the downside. But anyways, guys, thanks for watching. If you have any questions, comments, or concerns, please let me know. I'm going to keep trading, and as always, risk on.